US inflation hit 7% in December, fastest pace since 1982.
Deeply into negative territory because of the insidious nature of inflation and what it does to our savings. It eats the savings away as it sits in a bank account. I think when the sentiment starts to move towards gold, it'll be a quick, violent move upwards.
Welcome to Silver Heist. Thank you to our returning subscribers and guests. We are a channel that likes to hold physical gold and silver. To support my creation, please subscribe.
Today, we're pleased to welcome Mr. Garofalo. He's the chairman and CEO of Gold Royalty. He is a veteran of the gold industry for over 32 years. Mr. Garofalo, thank you for your time. Welcome to the show.
Thanks for having me on. It's a real pleasure.
So, Mr. Garofalo, just for our audience's benefit, what countries have you visited in pursuit of gold and other metals during your career?
Oh, very, very many on the list. But, for example, Australia, Tunisia, Turkey, throughout Europe, throughout South America, Central America, the US, Canada. So definitely covered a lot of ground over the years in the pursuit of gold.
And so when you visited these mines, what's the deepest you've been underground?
So the deepest underground mine I've been is around 3,300 meters below surface. So I'd say about that'll be about 11,000 feet below surface.
Okay, great. In 2021, the U.S. Mint produced 1.2 million ounces of their American Gold Eagles, which is like the most since 2009. So to give us some context for the mines that you worked for, what was the amount of ounces of gold in a good year?
Well, the entire industry produces 100 million ounces a year, just to give you a sense, but it's a pretty fragmented industry. The two biggest producers in the industry right now are Barrick and Newmont, and they each produce about 6 or 5 million ounces each. And I ran Gold Corp, which was merged with Newmont in 2019. And our best year, I think we produced about 3.5 million ounces.
There was a recent headline at the Wall Street Journal, January 2022, US inflation hit 7% in December, fastest pace since 1982. So what do you see for inflation and where do you think it goes next?
Well, I have to say that probably vastly understates what real inflation is, because if you're putting food in your stomach, you're putting gas in your car or a roof over your head, you're experiencing double-digit inflation. And so it's a bit disingenuous of the Federal Reserve to leave that out of the basket. Those are such vital elements of our existence. And so I think we're actually experiencing inflation not unlike what we saw in the 1970s and 80s when we had hyperinflation. And we saw interest rates had to get ratcheted up deep into double-digit territory to bring that inflation under control. We're starting to see the early evidence of that with the Federal Reserve talking about raising interest rates up a quarter point here, a quarter point there. But I think on a real basis, interest rates right now are deeply into negative territory because of the insidious nature of inflation and what it does to our savings. It eats the savings away as it sits in a bank account.
So with this acknowledgement that inflation is real, the gold price has been pretty flat in 2021. Is gold still a hedge against inflation?
The kind of price action we're experiencing now is very similar to what we saw in the late 1970s. So Paul Volcker had come into the Federal Reserve, I think it was in 1979, and he started to ratchet up interest rates, nominal rates steadily, and did so for a decade or more to bring inflation under control. Gold continued to run for at least 2 years after he started raising interest rates. And the reason that is because inflation was still accelerating even as he was raising interest rates. So even though nominal rates were going up, real interest rates continued to dive deeper into negative territory. I think we're going to see a repeat of that phenomenon here. And I think gold ultimately runs to the all-time peak that we saw back in 1981. That was $8.50 an ounce in 1981 dollars. Today in 2022 dollars, that would be $3,000 an ounce. So we're a long way from the cyclical peak. And I think when the sentiment starts to move towards gold, it'll be a quick, violent move upwards. Things never go up in a nice, steady upward line. When sentiment changes and capital gets reallocated in this type of market, where everything happens in real time plus, that capital reallocation will happen quickly and violently.
All things considered, so far this year, gold has held its own pretty well as the tech stocks kind of got hit. Do you see sort of a little bit of rotation starting?
Yeah, we are starting to see that. And I think, we've seen some corrections in the equity markets, in cryptocurrencies. there's a lot of excesses in the system, and that's really as a result of over 12 years now of systematic easing of interest rates, quantitative easing, introduction of more money supply into the system. Really, that goes back to the credit crisis that we experienced back in 2008, 2009, to stave off the bankruptcy of our financial systems. The government started to drop money from helicopters and continued to do so on an unrelenting basis for over a dozen years. So that's going to introduce excesses into the system. We're seeing the evidence of that with, I think, correcting equity markets, inflation achieving 40-year highs plus. That is going to have to come to roost at some point.
So over the past 24 months, how do you think the gold mining industry has handled things with respect to restrictions or supply chain issues?
They're struggling, to be honest with you. They're not immune from cost inflation. And I think that's the fundamental question you have to ask yourself as an investor. If you believe in gold as an asset class, where do you park your capital to get optimum exposure to gold, leverage to the gold price? And it should be the producers, but the reality is their costs are dynamic in a bad way, upwards. And I think that could erode margins in the industry, even as the gold price goes up. And that's why after 32 years of operating and building mines, I've positioned myself running a royalty company, because I think that's where you're going to get maximum leverage to the gold price, because we're exposed to the top line. We're not exposed to the cost. We get a fixed percentage of the revenue from a mine, and that comes right off the top line. So we're not worried about operating costs and capital cost inflation. We're completely insulated from that. And not only that, we have leverage to the exploration success on the property. So if the operator conducts a successful exploration program and grows the size of that deposit geologically, our royalty extends to that larger deposit as well. And so we get that exploration leverage in addition to the price leverage in gold.
So for illustrative purposes, in the music publishing industry, the royalty holder gets paid every time a song is featured in a commercial or in a movie. So in 1985, the Beatles catalog was sold for $47 million. In late 2021, Bruce Springsteen's catalog was sold for $550 million. And it's rumored that David Bowie's estate sold his for upwards of $250 million. So just as a fan, would you rather have the Beatles catalog, Springsteen's, or David Bowie's?
Springsteen. I'm a big Springsteen guy. I love Bruce Springsteen. So an E Street Band. Yeah.
Yes.
I love him.
Okay, great. So it's amazing how decades later, this creativity is still unleashing a royalty stream that's worth someone paying $500 million for.
And there's a lot of similarities between music and gold. Music stays with us forever. So does gold. Gold's indestructible. Every ounce that's ever been mined is still sitting above surface, either in a central bank vault or around people's wrists and fingers. So that kind of value creation is perpetual. And I think it's the same thing with music.
And every ounce of gold that was ever created that's under the surface is still under the surface, and it's not going anywhere.
And there's likely to be more of it. I mean, we're still exploring and haven't been in a very meaningful way in the industry in the last half a dozen years or so. But, there is gold to be found and there is crust, and I'm sure we'll find more. But again, those ounces are there. But the beauty of it is there's so little of it. You think that after 4,000 years of mining gold, that we would have a lot on the Earth's surface, but it's only 200,000 metric tons. And to give you a sense of what that looks like, you could fit that into only 4 Olympic-sized swimming pools. That's it. And so it's volumetrically not a lot. And we only add 5% to supply per year because it's so difficult to mine. Mining is capital intensive. There's a lot of technical and geological risk associated with it, political risk, social risk. It's a very, very tough business to be in. So it's not like we can flick a switch on. If gold went to 3,000, supply wouldn't go up. Supply has been going down now for close to 10 years because of the lack of investment in the ground and exploration and mine development. And so that trajectory downwards is unlikely to be reversed for at least 10 to 15 years because of the lack of new discoveries.
So gold royalty has been around for not a very long time, maybe a year or so. I'll let you correct me, but you're listed on the New York Stock Exchange. Can you explain some of the mix of assets that you have and what makes them common and what makes them unique?
We have 191 royalties across the Americas. with a heavy concentration of those royalties in the two best jurisdictions in the world for gold mining, Nevada and Quebec. And the reason they're the two best jurisdictions in the world is they're geologically prospective. They're great gold districts from a geological standpoint. They have low political risk and they have low regulatory risk. And 75% of the value of our business is in those two areas. And that's by design, but also because that's where the gold is. And we've been quite systematic about accumulating royalties on the best deposits in those jurisdictions. We have a royalty on Canada's biggest gold deposit, Canadian Malartic in Quebec. And we have a royalty on the United States' biggest gold mine, which is Goldstrike, operated by Barrick and Newmont in Nevada. We have a royalty on the underground extension of that deposit. They're mining in the open pit right now, but they're going to be moving underground in the next several years, and we have a royalty on that.
What stages are they in? Are some of them in production?
Yeah, so 6 are cash flowing currently, and 11 are in construction currently, and then the rest are at various stages from early stage exploration right through to feasibility. Really strong pipeline of growth. In fact, we have the largest compounded average growth rate in revenue over the next 3 years in the royalty sector, 60% compounded growth.
So you recently announced a maiden dividend. What can you tell us about that?
Well, that speaks to how quickly we've grown. You've talked about us being around a year. Actually, it's only been 10 months. We did our IPO in March of last year, raised $90 million US, and then went about to acquire royalties. We started with about a dozen royalties in the portfolio in development stage assets. And then we went out and merged with 3 of our peer companies, initially Ely Gold, then Golden Valley Royalties and the Abitibi Royalties. And that allowed us to increase our royalty portfolio to 191 royalties, but introduced meaningful cash flowing royalties, cornerstone assets with multi-decades of reserves. So we have such confidence in our cash flow. Within 10 months, we were able to introduce an inaugural dividend, and we're paying just under 1% yield, about 1 cent per share per quarter. But given our growth trajectory and our revenue over the next several years, we have a high degree of confidence we're going to grow that dividend over time.
Can you highlight a couple of members of your team and the experience they bring?
Yeah, within the management board, we have collectively over 400 years of mine operation and mine development experience. And that's unique in the royalty space because many royalty companies are run by financial engineers, former bankers and analysts and the like. But everybody on our board of management, virtually everybody, has had a hand in building and operating mines. And that gives us a unique perspective. As we're looking at royalties to invest in, we have a clear-eyed view of the underlying risk because we've been a developer, we've been an operator, we've been in their shoes, we understand what they're seeing at the mine site level. So we're able to do extensive and learned due diligence.
A quick story. I went to visit my college. I hadn't been there in a long time. The student tour guide was showing us the fancy new buildings, and they brought us into the library and we saw some features there. And I said, "That's where the card catalog used to be." And she said, "What's a card catalog?" So my question to you,
it's asking me what a typewriter is, but yeah.
Yes, my question to you is, what's a Rolodex, and do you have one?
Well, I have an iPhone with I guess a virtual Rolodex in it. Let me put it that way. But yeah, for sure, we have a deep network of people. Maybe network is the right nomenclature that we should be using, a term to describe our deep network of contacts we have in the industry. We have very, very senior people, and that's, I think, a distinct competitive advantage relative to our peers in the royalty space.
What are some of the next steps that you'd like to take in 2022?
Look, we're looking to continue to consolidate the sector. It's still highly fragmented. It's interesting in that the industry is comprised on the royalty side of 3 large cap companies, significant mega cap companies, Franco-Nevada, Wheaton Precious Metals, and Royal Gold. And then there's a collection, quite fragmented collection of companies that I would characterize as small cap. And we came in with a strategic objective of starting to roll up our peers. And we, in the course of 2021, we absorbed 3 of our peer companies and essentially quadrupled our size in that time, quadrupled our market cap, and increased our royalty portfolio more than tenfold in terms of number of royalties owned. And we're continuing that along that vein. This year, we announced a acquisition proposal to take over Elemental Royalties, another peer company in the space. And I think the importance of doing this is scale begets more scale, begets a lower cost of capital. Many of these companies in the smaller cap space in the royalty are really zombie companies. They're too small and liquid to matter to institutional investors, too small to attract capital to grow meaningfully. And what we're trying to create is a mid-tier company that simply doesn't exist in the royalty space currently. There is no mid-cap. There's a large cap and then there's a small cap. And we think through consolidation efforts that we're leading in the industry, we can create that $5 billion market cap royalty company that's small enough to grow, but big enough to matter to institutional investors.
So you're listed on the New York Stock Exchange, but the junior minor GDX-J has you as one of their, I'm not sure what you call it, member companies.
Yes.
What's the benefit of being in the GDX-J?
Well, you get passive investment, and we have a fairly significant weighting there for a small company. We got onto the GDX-J a month after our IPO, and the consolidation of Ely, Golden Valley, and Abitibi allowed us to triple our weighting on the GDX-J back in December. So we had considerable buying. In one day, we had $13 million of buying in our stock as a result of that rebalancing. So what it does is broaden our float, increase our liquidity. We have the greatest trading liquidity by a long shot among the smaller cap companies as a result of that GDX-J membership and as a result of how quickly we've grown the company over the course of the last 10 months.
If the audience wants to learn more, can you point them in a certain direction?
Well, super easy to remember. goldroyalty.com is our website. And so you can go on there, and if you have any inquiries, we have a general delivery mailbox. We have a 1-800 number. We'd love to hear from all of you. If you have any questions, I quite often answer myself or return calls myself to investors and shareholders, and delighted to speak to anybody who has questions about the royalty space or the gold sector generally and the dynamics there, because I think this is going to be an exciting time for the gold industry. I think the gold price is going to do extremely well in this environment. And I think the royalty space in particular will do exceedingly well and provide that leverage that you're looking for to gold price improvements.
Well, Mr. Garofalo, thank you for your time. It was great talking to you today.
Well, likewise, thank you for your time.